I've got an interesting highlight that's just a slap in the head. If you're paying attention and you're looking for a clue, are we going to go up or are we going to go down? All right. Yes, context is important. Where are we on the map or the chart? All right. That's a low that's a swing low, happened to come within the first few minutes of the open, and now they're testing it again. So traders are looking that are short from up here or short from down here. They're looking for a breakout to the downside. Take that out, continue lower. Then there are bottom feeders. There are people that are actually long, looking to hang on, might have got stopped out, or they're looking to play it and get long in here, looking for a rally and for this area to hold. But what's going to give you a qualifier? Well, we had one, but you had to be kind of paying attention and looking to see what's going to happen. We get a pink triangle, which in the area, in the immediate area, is an imbalance of, let me stop it, an imbalance of right in here, more sellers who want to sell it than buyers who want to buy it. In the immediate area of the last traded price. Then we get a blue, which means slightly more buyers right below the last traded price of people who want to buy it versus people who want to sell it. Then we get a pink. So the fight is clearly on. The first breach is what's most important. What do I mean by that? I stopped it. We get above these pinks. That's bullish. If you're short, you got to get out. If you're bullish, you got to take a shot because the pink comes in and it quickly gets above it. That's a probability that there's some of this continuation. So let's play it back again. You get the blue, you get a pink, and then you must get buy market orders that are coming in, lifting offers. Boom, it takes us up. And the laser goes from green to a green dot to eventually a red, but it shrunk completely once it breached this pink. What, let me pause again. What makes the price of anything go up? Let's just stick to futures. What makes the price of the S&P mini futures go up? Buy market orders. That's the order type. So even if there's a sell imbalance, meaning more people who want to sell it, like right above the last traded price, bunch of offers, not too many bids right below the last traded price. Yes, that's showing an imbalance, showing a likelihood that we could go down. And then all of a sudden, these orders, buy market orders come in, which are essentially invisible. They're not laying there. They just come in. Lift the offer, lift the offer. When you get enough of them, it could flip an imbalance very quickly. And when you flip an imbalance very quickly, it's got a lot of people off sides. It's like, oh, right? It should kind of go down. There's more of a sell imbalance, and then wham, we go through that area. So they buy markets just they soak up all that selling, and there's nothing really above, and price continues to go up. So the breach of important spots is going to give you sometimes the best clues of probability of all. When something that should happen doesn't. Again, it's a tell. It's traders tells are what it's all about.